A Turkish expert has said that Turkey's economic woes are far from over due to the tumbling currency, low capital inflows and looming short-term external debt. The Turkish lira weakened to near 18.0 against the dollar, trading at 17.96 on Tuesday afternoon, a record low since a currency turmoil in December 2021 when it hit an all-time low of 18.4.
Türk lirasının son dönemde hard currency dediğimiz euronun doların
The lira's recent depreciation against hard currencies, the dollar and the euro, will naturally increase the country's premium risks. This will inevitably increase the cost of risk in light of economic instability and unpredictability of the Turkish currency. Turkey's official inflation rate is almost 80%. However, unofficial figures are much higher.
Turkey's current account deficit, the difference between imports and exports for all types of goods and services, has also continued to widen amid the rise in energy prices following the eruption of the Ukraine conflict. According to the latest figures, the deficit reached $6.5 billion as of May and may continue to worsen in the fall. An annual deficit of $40 billion is expected for the next year. Moreover, inflation is soaring in Turkey. Official data released on Wednesday showed that Turkey's annual inflation hit 79.6% in July, the highest level in 24 years. The central bank cited supply shocks resulting from the Russia-Ukraine crisis for the high inflation, specifically with regard to fuel, food and agricultural prices. Despite high inflation, Turkey did not raise interest rates as many monetary institutions did to counter inflation.
What Turkey must do is to clear out the factors that have created the current situation. It can end its insistence to continue unusual economic policies and take into account the inflation when establishing its interest rates, therefore to return to globally accepted and established economic policies which have destabilized the economy. However, there has been no signal so far toward this path. Therefore, the decline of the lira is continuing with a probable impact on upcoming inflation figures and the purchasing power of households.